Big Lou is intimately familiar with your problems, and if you're 50 or 60 years old and in reasonably good health, a $1 million policy should only cost about $100 to $200 per month. Big Lou may have a solution for your previous policies as well. You may even save enough money to lighten the load on your new $1 million policy. Remember, call Big Lou. He's like you, except he's only on number 2. Call Term Provider at 800-555-1509. That's 800-555-1509 for $1 million in term life insurance that you can live with. Call Big Lou at 800-555-1509. 800-555-1509.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you, and we kick things off looking at Walmart earnings from this morning, and Walmart stock down about 4%. Paul, what did we see from Walmart?
Chuck, I thought it was overall a pretty good quarter that reported, but ultimately it seems like the concern here with the market is that their profitability numbers fell in a little bit short of estimates. Their earnings per share came in at 68 cents a share versus what Wall Street had expected of 74 cents a share. A lot of that reason for the miss on the earnings front, the retailer cited, was insurance claims, legal charges, and restructuring costs that weigh down on profitability, but otherwise, outside of that, I understand, that's what the street cares about, is the miss there. There were many positives that I took away from this report, unless, you can feel free to disagree, but the sales growth that they're anticipating for the rest of the fiscal year is going to be ranging from 3.75% to 4.75%. That's up from where it previously was, so continuing to see strong sales growth for the remainder of the year. They reported comp sales growth of 4.6% in Q2 compared to last year. Like we just talked about the last couple of days, how Target has seen declining sales growth, and some of these other retailers, granted on the home improvement side, Home Depot and Lowe's, have barely been able to scratch out 1%. And I know Walmart's business is a different makeup, but still some pretty good numbers there. Their e-commerce side of things continues to roar, 25% growth there, and the CFO stating that the consumer has continued to be quite resilient in terms of the face of tariff impact here. They saw prices rise across items in the U.S. about 1% in the quarter. You had a little bit of mixed messaging from the CEO, differing slightly from the CFO's commentary about the consumer being resilient, mentioning that some of these discretionary purchases showed a little bit of sensitivity to tariffs. But overall, I take this as a whole as a pretty good quarter for Walmart. Walmart stock had been bid up pretty high, so some of this sell-off could just be as a result of the fact that it's been on a tear.
Yeah, I think that when I look at this, it's something where you've got, a number of good items that you mentioned in terms of, the e-commerce sales moving up. But I think the big thing is, look, if you look at their net sales projections and that higher guidance that they also gave guidance as to earnings for the full year that were basically unchanged, like less than a 1% shift in earnings. And what that implies is basically, look, the reason that we are expecting net sales to rise is because we think our cost of goods sold is going to rise, and as such, we're going to try to pass that through. So it's not really, they're not expecting stronger organic growth. It's just they're going to be seeing some higher costs, and they're going to be passing that through to maintain margins because Walmart operates on a pretty tight leash when it comes to their margins, just like most retailers. I mean, this is, you can go back 150 years and find, information on grocery stores, basically, grocery stores and retailers saying, hey, we're trying to operate, as at low margins in order to, maximize sales. And that's Walmart's game. They've just leveraged it better than anyone else because of, the when and where they operate. So when you have margins of, 4%, you don't have a ton of wiggle room to be able to absorb higher prices. You can do a little bit of it, but ultimately, you got to pass those through. You can't just be like, okay, our costs are going up by 3%. We're going to let, 3/4 of our profit go away. No, it doesn't really work like that. You can't do that. So when I look at Walmart, I think the second piece that you said makes a ton of sense, which is, look, it's a company that's been on a tear and it's priced expensively. I mean, I don't know that people realize this right now. They should. Walmart right now trades at 37 times forward earnings, meaning projected earnings for the next 12 months. To put this in perspective, Nvidia trades at 40 times forward earnings right now. Now, the earnings growth projections for Nvidia are steeper, so you can make a case it's priced, way more steeply than Walmart. But in terms of, hey, what does everyone think their next 12 months earnings are going to be and what's their price relative to that? The two companies are priced pretty darn closely at the moment, and I think we all can agree that, hey, as much as, Walmart is really, really consistent in its business, it's not doing the things that Nvidia has been doing over the last couple of years, nor is it going to suddenly start doing that. We're not going to see Walmart sales suddenly start going up 50% year over year and their profit going up 200% year over year because they sell pita chips, not computer chips.
Very true.
It's just, it is what it is. So I think the two things that can absolutely be true here are, hey, Walmart continues to show they're a great operator. Mm-hmm. Their e-commerce business is showing some really good growth. I think they're up to, like 20% of all their sales now being online through Walmart.com, which is huge given, where they've come from in the last 5 to 7 years. And I think ultimately having that grocery piece attached to them where, what is it, like 50% of their sales, I think, are groceries as well. So keep in mind, like, most people don't buy a ton of groceries online through Walmart. Like, the data is not strong on that side. And that basically means that, like, 40 to 50% of their non-grocery sales are coming online, which is huge. Like, that's huge for them. So I think overall, it's a well-run company. There's nothing too exciting about it, but they continue to execute well. And in this environment right now, you're going to pay for good execution, and I think that's the reason why it still is priced as highly as it is. The thing that I wonder about with Walmart, and this I've said this before about other companies, like, you look at, take Apple or Microsoft as an example. So, like, let's say that Apple has, a bad year or two. What does that actually look like, and why does... This is going to sound kind of dumb at first, but assuming that you own Apple stock, mm-hmm. even if they had a bad year or two, why would the price move down? And I know that sounds kind of dumb, because I'm basically saying, why should Apple stock ever go down? But I want you to hear me out for a minute. So the reasons why, markets tend to price things, or try to price things efficiently is because, hey, if you don't, then you get caught by surprise by someone, pulling an end around on you, and all of a sudden you're like, oh, like, what happened? Example would be, okay, let's say that you are, what's a bad company, right? Beyond Meat, okay? Not a bad company, but just a bad
Coles.
stock. Okay.
How dare you?
No, we're not going to do this. We're not going to do this. Not here.
Okay.
This is the war room. You can't fight here. So you take Beyond Meat right now. And the worry with Beyond Meat is very real in that, hey, it's a $182 million company. They're not profitable. Their free cash flow is negative. They don't have a ton of cash on hand. They could go out of business, and if they declare bankruptcy and you still own the shares, you have nothing. I think that we can all generally agree that in the short term, the risk of bankruptcy to an Apple or Microsoft or even a Walmart is pretty low. And likewise, the idea that someone's going to come in with some monster bid to acquire them is also kind of low as well. So I guess you kind of look at them, and I have this weird thought from time to time on them where I just look at the stocks and I'm like, why does anyone trade these? Because they can't really go out of business tomorrow. They're not going to be acquired by anyone. So who really cares what the fair value is for these anyways?
I would push back on that because ultimately the reason why Walmart can trade at 35 times forward earnings is because of the perception of them, like you mentioned before, as good operators and good executors. But if for some reason that story changed, for whatever reason, whether it is something that is at the corporate level, loss of employees, some sort of scandal that hits them, the same thing can apply for Apple too. Ultimately, the reason that they're able to command these high valuations, part of it is just kind of the reputation story around them, where fundamentally, I don't think you could really make the argument that Walmart, given its business, should trade at 35 times earnings, but it's trading that way because of kind of the premium that it commands for its reputation. Those things take a hit, then you can see a differing story as to where it would trade, I guess. That would be the thought I would have.
Sure. I kind of look at these sometimes and I'm like, I don't know, like nothing's really going to happen that's notable in either direction, or like it doesn't seem like it, even look at all the AI hype and everyone's like, oh, Apple doesn't have, AI. Well, they still have 40% margins. So like, who cares? Like if AI starts to threaten their business, then actually care. But otherwise, I don't know, like, do we really does CNBC need something to talk about?
The global market share in China declining for
okay,
Apple's, is this
who cares,
somewhat of a concern? It's a concern. They could sell less product there. That's 20% of their sales, and they're decreasing there. I'm not saying...
But why should that affect the price of the stock?
Based on their revenue relative to what they're trading.
I guess... here's what I'm getting. Like, these companies
are
so
developed that you're saying that revenue couldn't shift that much to jigger it one way or another.
I know that what I'm saying is going to sound dumb, and I know that it's not 100% true. But, like, is Apple going to go the way of digital? Like, everyone always likes to be like, oh, all these, like, 70s and 80s tech companies went out of business, and Kodak, that could happen to
that
Apple.
Kind of thing.
Like, you really think with how entrenched Apple is today, it's going to happen to them? Because, comparing Apple to Kodak is like comparing a Ferrari to a horse-drawn carriage.
I'm drawing blank on historical. Their size and scale is crazy, but I'm sure there has been historical examples of companies that you thought GE has resurged, but they're a company that probably 20 years ago you would say that they could do no wrong and they couldn't go through what was a period that was really challenging. Did they go out of business? No, but it looked a lot different going forward. Could they spread themselves too thin? Yeah, but I'll have to think with some other example. It's hard.
I have this thought that goes through my head. I don't fully believe it, but sometimes I'm just like, why should that go down? Like, just because they sold fewer iPhones? Like, they're still making a boatload of money. Who cares how many they sold this quarter?
There probably was a horse and buggish company out there that got crushed by Ford back in the day. Maybe.
I'm sure.
But not the size of Apple. I get it.
And look, I'm sure all the AI people are just like looking at me around the corner, just like, ooh, like Chuck's gonna be wrong. Like I get it. Like, but I have these thoughts that bubble up occasionally, and I like to let you guys know. That's it.
It's the war room.
Let's take a quick break. When we return, we'll talk a little bit about the details from the EU and U.S. trade agreement that were unveiled this morning.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
All right, this morning, somewhere in the 7 to 8 o'clock hour, I don't know exactly when, we saw the text of the deal between the U.S. and EU posted by the White House online. What did we learn through the actual written deal here?
Basically, what the case is going to be for certain areas of imports, there will be potentially the ability for the EU to import things such as cars, pharmaceuticals, or semiconductors at a 15% tariff rate. If you look at autos, that was previously at 27.5%. It would come down to 15%. However, there are some conditions that the EU would need to meet in order to get those preferential rates on some of those sectoral discounts that I mentioned before. What those conditions are, the EU will have to eliminate its own tariffs on U.S. industrial goods, as well as opening the door to the U.S. to be able to sell agricultural goods as well as seafood into the EU. So that was probably the biggest piece. And to me, it seems as if 15% is kind of going to be the standard level for most of us, assuming the conditions get met.
Seems like it.
Yeah.
And so obviously the question is going to be predominantly when it comes to the EU, hey, how do the automakers deal with this? Because the literal and metaphorical engine for the EU is the German auto sector. Glad we got that one in there. And so obviously, look, if it's more expensive to send Volkswagens and Mercedes over to the U.S., hey, that's going to be a thing. Both those companies do have facilities that they operate in the United States. But if you look at what they mostly make in the U.S., it is a lot of the SUVs and stuff that we tend to buy. If you are buying a Mercedes sedan, as an example, they are exporting that from Germany. Likewise, if you look at a number of Volkswagen models, it's the same situation as well. So it's not an all or nothing, and we'll have to figure out how they deal with pricing and margins because, look, auto business, it's tough business. It's like, hey, let's spend $50 billion developing this plant, and then we're going to eke out 5 to 7% margins if we're lucky, and there's no recession over the next 10 years, and that'll figure out how to pay for this thing. So it's a tough business to be in, and they're going to have to figure out how to adapt. That's the only thing that you can say about it.
Particularly a concern for Germany, as you mentioned, that had imported $35 billion of autos and auto parts in 2024 to the U.S., and it's a huge part of their economy. So this is something that is of significant importance to Germany.
Let's talk a little bit about the Fed minutes that we saw yesterday. These came out, I think it was like 2 p.m., somewhere in that ballpark. And it's really interesting what we saw actually from the Fed minutes. Normally, I don't really pay much attention to them. If I'm being 100% honest, I'm kind of like, okay, like, who cares what like the tenor of the meeting was? It's not really important to me. But we got a whole bunch of detail about kind of not who thought what, but like what quantity of people at the Fed meeting thought what. And I found it, useful to kind of break this down into different categories. So what did most people believe? Inflation is above the 2% goal. The tariff effect can take time to seep in, and those were kind of the two big things that the majority of people believed. Several people thought that the risks were balanced, that they were concerned about asset valuations, specifically like kind of market valuations and real estate and prices like that being, high. Expect some weaker growth in the second half of the year and are starting to see signs of slower income growth hitting consumers as well. Okay. Then what were the things that a few people noted? Tariff pass-through has been kind of limited so far. Businesses are trying to avoid passing on costs. Tariffs could be a one-time price bump, or they could cause persistent inflation, like you had both sides expressed there by a few people. Immigration policies hurting labor supply. This, I think, we're going to continue to hear more about over the next 6 months. Weakening housing demand. And, those were kind of the big things there. And then you got to, hey, what did a couple members believe? Tariffs are masking true inflation, which is closer to 2%. Expectations are driven by overall inflation, and households have low delinquencies, and there's not much, concern on that side of things. So I think overall the message from this was actually a little bit more hawkish than what we heard a couple weeks ago, in that it was pretty much, hey, most of us didn't really want to do anything. A few people actually thought we should raise rates, and there were a couple that, publicly said already, yes, I wanted to, lower rates.
Yeah. That was most publicized, the cutting rate piece.
Yeah, because no one voted to raise rates in the last meeting, But it sounds like there were a few people that actually talked about it as if, okay, maybe we should. And what I wonder about on this, in terms of the Fed minutes, it's a little bit more hawkish tilt than I think people were expecting. Is it a preview of what we're going to hear from Mr. Powell at Jackson Hole tomorrow? The good news, when we come back, we're going to preview that preview after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance. And what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but A $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after beginning the day well into negative territory, markets are now relatively flat at the moment as traders digest significant retailer earnings from Walmart and await Fed Chairman Jerome Powell's speech in Jackson Hole tomorrow morning. At the moment, the Dow is down by 0.2% or 90 points lower. S&P 500 is down over 0.1% or 11 points lower. NASDAQ down 0.1% as well, or 20 points lower. Russell 2000 mostly flat at the moment. 10-year Treasury yield is up 3 basis points at 4.328%, and crude oil is up about 0.5% higher, trading right around $63 a barrel. Walmart reported rapid sales growth in the second quarter and raised its outlook, saying it is winning over shoppers with grocery discounts and fast shipping. However, the retail giant missed earnings expectations on an adjusted basis, sending shares 4% lower on the day. According to the Wall Street Journal, Meta has frozen hiring in its artificial intelligence division after spending months scooping up researchers and engineers. Shares in the Facebook parent company are down over 0.5%. Speaking of hiring freezes, Novo Nordisk announced a hiring freeze in non-critical areas as it looks to fend off competition and control costs. Shares in the Ozempic and Wegovy maker are up over 1%. Meanwhile, beauty and scents company Coty is seeing its stock plunge 19% after it posted an unexpected quarterly net loss. The Rimmel owner is expanding into fragrance mists and said consumers still want to pamper themselves. Cracker Barrel plunging over 12% after the restaurant and gift shop chain unveiled an updated logo earlier this week, leading to criticism on social media. And new streaming services from ESPN and Fox officially launched today, making their cable network offerings available for a monthly subscription that's not confusing in the least bit and doesn't overwhelm me at all. Disney is down by 1%, while Fox is up modestly. I'm Tucker Silva, and that is Wall Street Watch.
So tomorrow, Jay Powell is going to give his annual speech at Jackson Hole. And the lingering question out there is, what shade of purple will Jay Powell's tie be? I've prepared a selection for you. I'm curious to hear what you guys think. Is it going to be just, base purple? Is that what we're going with? Are we going with something more amethyst in nature? Maybe a mauve? Maybe a raspberry? Something along those lines? Violet? What direction do you think he's going to take the tie in?
I'll go violet.
Solid or patterned?
Solid.
Tucker, any thoughts?
I don't know, but he's going to wear his finest denim jeans because it is a Friday.
You think he's going jeans?
Yep.
Does Jay Powell own
took him
jeans?
to the dry cleaner like Michael Scott did. Yep.
I don't know if Jay Powell... I feel like Jay Powell gardens in khakis. Not that there's anything wrong with that.
Well, he's making a speech, though, but it is a Friday. He's still on a trip. Wants to keep it cash.
I don't know.
Purple Hawaiian shirt, yeah.
Let me ask this. Does Jay Powell own a pair of shorts?
Oh, 100%, yeah. He's a cargo guy, cargo shorts guy.
What, do you think he's the Don of the Mafia? He doesn't wear shorts?
No, I think he wears sweat shorts.
I think he's a cargo shorts guy. He's got all that gardening equipment he's got to handle,
I see him as sweat shorts, maybe even like cut-off sweat shorts, Bill Belichick style, but for the pants.
Actually, one of these articles, to tie it into something from the stack, did mention that he works out quite a bit. So he definitely has shorts. He's got a personal trainer.
I don't know.
Swimmer.
Some people are pants worker outers. You know, you always have that one guy at the gym that is in, full pants, full, long sleeves, just working up the sweat. But we digress. Jackson Hole. Question is, what is Powell's speech going to be like? Now, 3 years ago, back in 2022, he delivered arguably his most hawkish speech of his tenure. The rumor out there is that he rewrote it, actually, the night before, just because he was unhappy with what he had done previously. The S&P 500 promptly puked about 15% through mid-October, and then we've been on a steady upward clip since then with, a couple hiccups here and there. The other, years, you look at, again, kind of the most, I'm looking at the post-pandemic era just because, seeing what Jay Powell said in 2019 is not really relevant to where the economy is today. You look at the other 3 years, kind of during that time period, and Powell had, some mixed speeches to the point where last year, arguably one of his most dovish speeches. Hey, we believe, it's appropriate to now, pay more attention to the unemployment risk and, the balance of risks have changed. And even with that, by the way, the market kind of anticipated it and fell 4 or 5% shortly after over the next week or so before bottoming. So the trend over the last 4 years has been whatever Powell has said, the market really hasn't liked it in the subsequent weeks. But what is he actually going to say? The people that are plugged into Powell think it's going to be with a hawkish tilt, but with no specificity so that basically no one can grab onto anything. I kind of wonder if Powell wants to be more specific here. And I mention that only because of two things. The first is, obviously, Powell and the president not getting along great, and this is a chance for him to show Fed independence. The second piece, this is his last speech at Jackson Hole.
Mm-hmm.
No matter what, he will not be the Fed chair at this time next year. And so it's a chance for him to kind of leave a legacy. And I wonder if he's thinking about that in terms of how he frames his speech. I'm not saying that will be more dovish or more hawkish. I don't know. But it's going to be his last Jackson Hole speech. And I wonder if he thinks about it in that context and pushes in one direction more than he otherwise would have because of that.
Certainly sentiment on Fed independence, I could potentially see that being something that Powell focuses on during this discussion. I would say that in general, the specificity I would imagine will be incredibly limited. Probably, to your point, on the hawkish stance, he'll mention some of the concerning pieces with potential increases to inflation and the cooling labor market, but not commit to anything and ask for us to see several more months of data. That's probably how he'd play it right down the middle. Something that's more longer term will be interesting, any sort of commentary he has on longer term Federal Reserve monetary policy. One of the big decisions that was made pre-pandemic was this idea of letting inflation run hotter than 2%, because for the last 10 or 15 years or so, we never talked about inflation at all because there wasn't really any inflation out there.
It was lower for a while. It was this idea of average inflation targeting. Hey, if we've been at, 1.7 for the last 5 years, maybe it running at 2.5 for a few years isn't the worst thing.
That I don't think is going to be part of the plans going forward, because when we got up to 9% in 2022 and the mistakes that were made thinking that inflation was transitory, pretty good indication of not having that be part of the future plans. But that, along with some other concepts just in terms of what monetary policy looks like going forward, that will be the other piece of it. It will be a much more minor part of the speech in terms of what pundits focus on the next day, but also something that will be interesting to follow.
The interesting piece on this is how projections for the September meeting have evolved over the last week. Just as an example, if we go back a week ago, you had a 100% chance of, it was a 92% chance of a 0.25% rate hike at the September meeting. Yesterday, it was down to an 82.4% chance, and today it's a 75.3% chance. So we've kind of seen this backsliding, and it's been because of a few different things that we've gotten as far as, different data points that have come out during that time. Quite honestly, like you look at how the data has come out and you say, okay, I can understand how we may have gotten here. Obviously, you had the Fed minutes yesterday. This morning, you had the Philly Fed Manufacturing Index, which came in with not really a great reading, but prices paid continued to increase there. Likewise, S&P Global Manufacturing PMI came in hotter than expected with, some signs of pricing pressure as well. And so what you're starting to see showing up in more of the data is additional pricing pressure. And quite honestly, the data as far as economic activity goes, as we've talked about, hasn't been as bad as people feared. And so I think aside from that jobs report at the beginning of this month, you look at the data in the aggregate and you're kind of like, okay, I'm not sure the economy's worsening. And if it isn't worsening, doesn't that mean that cuts probably don't need to happen and we need to see what happens with pricing? This is just what the market might be thinking right now. This can obviously all change over the next 3 weeks. If we get some weekly jobless claims numbers that start to trend higher, if we get another weak jobs report, these are things that could alter the balance here and move us much closer to, a certainty of a cut again. But at this point, the trend has been in the opposite direction over the last week or so, and we'll have to see how it evolves, clearly, through Powell's speech tomorrow. So this will be again, I think it'll be really interesting to listen to because, quite honestly, and this is the tough part right now, I think there's a compelling case for cuts. I think there's also a compelling case to do nothing. And I think there's a compelling case to hike if you think that the inflation stuff that's happening on services is potentially sticking around. So all I know is I'm really happy that I'm not sitting in Jay Powell's chair because I'd be there trying to find my three-sided coin being like, what am I going to do? Because I don't know how to handle it.
I can't tell you how many times that thought has popped in my head as to I'm so glad I don't have to do this job.
Right, and here's the thing. It's really, in terms of your actual decision-making, there's not that much
binary.
that you need to do.
Yes or no.
It's okay, every 6 weeks we're going to get the gang together and we're going to decide, up, down, or the same. But there's a lot that goes into it, and if you get it wrong, oh boy.
I've compared it to being a referee before. You get a ton of heat if you get it wrong, but not a lot of credit if you do things right.
It's, a referee, you have a lot of little decisions you have to make.
I'm not saying the yes and no piece, just the credit piece.
This is just like you show up every 6 weeks, and that's it. I mean, I'm not saying he's not working in the interim. He obviously is, but ultimately you're judged based on your actions, not based on your thoughts.
Mm-hmm.
And so, man, imagine having 8 things that you do each year, and that's it. And all the pressure that goes into it with basically like the global economy just resting on your shoulders.
It's a lot.
It is. I don't know how you deal with that kind of pressure, to be honest. It's quite a bit. Let's take a quick break. When we return, this is a good one. We're going to talk about Boston property valuations because
very interesting story.
This is a really good story, and I think a fascinating look at a problem that could be hitting a number of different cities and states in the coming years.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Piece from Bloomberg today. Crazy vacancies force Boston landlords to challenge valuations. And what it talks about is that owners of office buildings in the city of Boston have challenged assessed values for 388 different commercial buildings in downtown Boston this year. That is an 83% jump from the same time period in 2024. And the big thing is Boston receives a ton of its tax revenue from commercial property taxes. Likewise, those commercial properties, often office buildings, do not have the same level of occupancy that they did 5, 6, 7 years ago for obvious reasons. And so you have landlords that are out there, and again, sometimes these are small, individuals that have, a 6,000 square foot, small office building that's out there. Sometimes they are, the giant office buildings on State Street and so on and so forth. And the big thing is that property taxes supply about 3/4 of the city's $4.8 billion budget. they have already lowered the assessed value of properties by 12% over the past 2 years. But you've got landlords out there saying, no, like this needs to be, discounted closer to 50%. So who's actually right? It's probably somewhere in between, because obviously the landlords are going to want to pay as little property tax as possible. Likewise, the city of Boston wants to collect as much as possible. In terms of where the assessed values actually land, look, things probably weren't going to stay as good as they were, in 2018 and 2019 forever. They're probably not going to stay as bad as they are right now, and you don't want to have to be making big adjustments every year based on, assessing where vacancy and this and that is. And so I think it is pointing towards these tax valuations having to come down, but now you're blowing a hole in city budgets, and the question is, where do you come up with the revenue to fill the
That's
gap?
the question that was popping around my head. Okay, how would you even go about fixing this? If you're talking about 3/4 of revenue, the short answer is there's not a real immediate fix to it. And that 12% lowering that they've done over the last 2 years is a start. I think maybe the 50% value decline on the office building is a little rich, but I don't think it's that far off from maybe 30%, right, Chuck, in terms of value. The problem is there's such limited transactions that there's not a lot of comparisons that you can make on the sales side because people aren't selling these office buildings, but it's a really difficult bind. And then on the backs of that, you also have those residential owners in Boston, which there aren't many, but they will have to pick up more of their share of property tax revenue if they could see their property taxes increase as a result of that. So that's a big concern that politicians have. Michelle Wu is running for re-election and trying to still push more of that through commercial property landlords, the need for more revenue on the tax side of things from them.
Now, some of this also, one of the people they interview here, I'll quote on this. So, a property from this landlord is one of the few to win an abatement. The city agreed to take nearly $2 million off its initial $14.2 million assessment for an 11-story Court Square office building that he says is about 2/3 empty. Well, if your building's 2/3 empty, maybe you got to lower the prices that you're, asking for on it also. I mean, this cuts both ways. Who's to say that you need to get those prices, for your building as well? So there's that. Let's see. This Boeing story, no, I don't want to do that. I want to hop forward to Chipotle. I'm really glad that Tucker put this in. They're teaming up with a company called Zipline to test drone burrito delivery, and I am here to tell you, hell no.
You're in?
Thought
about it? You are in.
Been talking about this for 10 years now.
Right, first of all...
I feel like this concept is not
We've been covering
new.
this since I had hair. And so, this is just not a new idea. Second, if there's one thing that I don't want delivered by drone, it's a 3-pound burrito that could land on my head if you put it in the wrong spot or if it falls out of the little carrying case or however they do it. Beyond that, as I've said before, I just don't want a million small drones flying about in the skies. It doesn't strike me as the kind of environment that I would like to live in.
It seems like an autonomous vehicle would probably be the more likely.
Now, if you need to get, medical supplies to a remote, place in, the mountains, sure, I understand why drone delivery makes sense. Otherwise, Quick break here. Hour 2 coming up.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs, and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutnick from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts, and this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you, and taking a look around markets. We've got a very small sell-off taking place today thus far. The Dow Jones Industrial Average down 108 points, about 0.25%. The S&P 500 down 14 points, about 0.25%. The NASDAQ Composite down 38 points, about 0.25%. So just, again, some continued downward drift here, but nothing exciting in either direction when it comes to equities. When we take a look at the bond market, we got, again, kind of a modest sell-off taking place here. The 10-year Treasury up 4 basis points to 4.337%. Mortgage News Daily currently has the national average for 30-year fixed-rate mortgages at 6.61. That'll probably tick up to 6.65 or somewhere in that range in response once we get the afternoon update there. But mortgage rates continuing to hold in the mid-sixes. Once you get above 6 2/3, I guess that gets you to high sixes. But just kind of hanging out where they've been for quite a while at this point. When we take a look at oil, we've got West Texas Intermediate up 29 cents a barrel to $63 right on the nose. And gold today is down $1.70 an ounce to $33.86 and 80 cents. We are now going to try to answer one of the age-old questions about investing. What matters more to the stock market, the Fed or Nvidia? And the answer is the Fed. Quite honestly, this is not a real question. It is, because this is a real piece that the New York Times published, but ultimately it's the Fed, because if Jay Powell pushed the wrong button when he, wakes up every 6 weeks, the Fed could move markets far more than Nvidia does on a daily basis.
Could, but I don't think will have as much impact. His speech on Friday versus Nvidia's earnings next Thursday, my view is that Nvidia's earnings will be more impactful to shifting the market, because I feel that he's going to play it down the middle.
How are we going to measure this? Are you going to measure it based on performance the next day, the next week? How do you want to approach it?
So Nvidia, are they a morning report, or are they
they're
after
afternoon.
close? Okay. So it's next Thursday, right?
Next Thursday.
So Friday's market moves.
Why don't we do the 3 trading days after?
Oh, I was just going to go day after immediate reaction.
First move's always wrong.
But it's implying action one way or another.
It is, but if that action subsequently gets reversed, did anything really happen?
At the close of the day. You're saying, yeah.
How many times have we seen, even just go back to the jobs report a few weeks ago, that Friday, S&P's down 100, Monday, up 90. Why'd we put 2 different shirts on? Why didn't we just stay home and call it a day?
So here we're going to go prediction here. So you're going to say that the Fed speech tomorrow will have more impact on.
I will say,
is that an afternoon speech too, or that's a morning one?
It's morning, but yeah. I'll include tomorrow if you want. Mm-hmm. You tell me. Do you want me to do Friday, Monday, Tuesday, or Monday, Tuesday, Wednesday?
Friday, Monday, Tuesday.
Okay. So I think there will be a greater magnitude market move. Looking at, are we doing S&P 500 or NASDAQ? Because if it's NASDAQ, NVIDIA is a bigger chunk.
S&P 500 is more fair.
Okay. I think there will be a bigger move in either direction, the 3 days post-Powell versus 3 days post-NVIDIA.
Let's do it.
Okay.
Lock it in.
There we go. Tucker, you got that up on the board?
Yep.
Okay.
It's a nice short payoff.
It is. It's not, Hyperloop in 10 years, which
and hopefully
I think we still have 3 more years to wait until we can pay that off, but it's not looking good for me.
And I'll just never come back to the show if I'm wrong.
No, we have to have you back on so we can tell you you're wrong.
Nope.
So the big thing is NVIDIA obviously is the biggest company or second biggest company in the S&P 500 by market cap. On any given day right now, it currently makes up about just under 8% of the S&P 500. So it's not uncommon for NVIDIA to still have, 5 to 6% moves in a single day, and it can drag along, the Microsoft and Amazons and Metas and Googles of the world as well. But ultimately, all of this, in my opinion, comes back to one thing, which is, look, what's the price of money? And that's what Jay Powell and the gang set on a regular basis. They tell you how expensive it is to borrow, lend, whatever you want to be doing, at least as, benchmark rates and things like that. So I think, look, in the 2 things are true, actually. In the last 3 years, because it's really been 23, 24, and 25 that AI has been a thing. It was late 22 when ChatGPT was unveiled to us. The first is that obviously NVIDIA has just been on an absolute tear during that time, and it, along with the other tech companies, have been the dominant market force out there. It's also true that if Powell and crew screwed up, well, things could have gone very differently, depending on how the economy would have moved. So I continue to think there is no force in the financial universe that has the gravity that the Fed does. NVIDIA is far and away the most powerful, equity mover out there, but it still can't move the whole market like the Fed does.
The reason for my prediction is that not that the Fed doesn't have the power to influence the market more, they certainly do, but the path that they're trending on, which is sort of this wait and see approach, I just think in the near term, they're not going to say much that it's going to move the markets as much as Nvidia could potentially move the markets, because all the earnings power has accreted to Nvidia during this AI boom period. Valuations, don't get me wrong, have increased for other companies as a result of this, but Nvidia is the one that's captured the majority of the earnings pie. Sure. And if there's any dent to that story, for some reason that they're not seeing as much in terms of demand for their chips, I think that could substantially leave a lot of AI companies in a really bad spot from a valuation standpoint. I don't necessarily anticipate that next week, or conversely, if there is still tremendous momentum there, perhaps moves in the other direction, but we shall see.
Yeah, look, if you talk about the companies that actually sell the AI products, they're not making much revenue from them right now. And the problem the problem is not just making much revenue, it's how do you turn that revenue into actual profit, because you're spending a ton on data center construction. And at some point, that's going to end up being untenable. It's not yet, because everyone still is just, filing in and saying, okay, they're building it and, the users will come. But there's a hedge fund guy that I like to follow. He goes by his name's Cuppy. I think his full name is like Harrison Cooperman or something like that. I can't remember his full name, but he wrote a piece on this very topic yesterday, which is why I think that this is kind of interesting. And here's the basic premise of it. If you look at the math, so all of the big tech companies have committed to about $400 billion in data center construction for next year. Mm-hmm. And ultimately, what you have to do with that is that construction has a useful life to it. It's what we call depreciation. How much of it, gets depreciated each year based on the estimated useful life. And it's different for the facility versus the chips versus, everything. And so basically he came to, okay, it's probably like a 10-year depreciation cycle on average. So in year one, then, you've got $40 billion in depreciation. And in order to actually generate enough profit to overcome that, okay, let's say that you do $160 billion in revenue at a 25% gross margin. So now you've got $40 billion of gross margin against your depreciation. Great, okay, so you can, kind of get back to break even at that point. But ultimately, that's just for 1 year of construction. If you're talking about doing that over and over and over, where are the hundreds of billions of dollars in revenue going to come from in order to get you the tens of billions of dollars in gross profit that you need in order to cover that depreciation cost? And he basically said, look, it's not that AI isn't going to be used or it isn't going to be hugely transformative, but back in the 1990s and early 2000s, companies spent billions of dollars laying fiber optic networks and all this stuff. They went out of business. We still use the networks, but the companies that did all of the groundwork for that aren't there anymore. The company that he mentions is one called Global Crossing, who I'm sure some of our listeners are familiar with. And ultimately, they went belly up simply because they were spending billions of dollars and the revenue just never came. Again, no one looks at the internet as a failure. It's a huge success, but the companies that built it weren't the ones that actually benefited from it.
Yeah, just ask the web browsers out there, Alta Vista or Yahoo, like other ones out there. Not the browsers, but the search engines of yesteryear.
Even some of the browsers.
Browsers too. That was
Netscape.
Mosaic, Netscape. They didn't ultimately accrete all the value, and I'm sure a very similar thing will happen here with AI. And I read a similar piece, which was all these big hyperscalers, the Googles, the Amazons, the Microsofts. Almost a FOMO effect, the fear of missing it, has caused this $400 billion of spending. But that doesn't mean necessarily that all of them are going to get the return on investment from all that money, because it's a big, big hurdle to cross.
So two things can be true. AI can be completely transformative, and the people that are building it right now might not actually be the ones who end up benefiting from it. Let's take a quick break. When we return, we'll do a little bit of trivia after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Another day of World War II trivia here on the Financial Exchange. On July 26, 1945, a U.S. warship delivered the atomic bombs to a small island in the Philippine Sea. 4 days after delivery, the ship was sunk by a Japanese submarine. So, trivia question today is, what was the name of the U.S. warship that delivered the atomic bombs? Once again, what was the name of the U.S. warship that delivered the atomic bombs? And I'll give you a hint. Quint drunkenly retells the story in the movie Jaws. Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
All right, Paul, we got a piece from Bloomberg. It is in their opinion section. It's from their editorial board. So the whole board got together and said, we think this is a good idea to write. It's titled, America's Housing Crisis is a Job for Congress. And pretty much what it's talking about is that it's too expensive to buy homes right now. The prices are too darn high. And golly gee willikers, how do we fix this? I'll quote here. Bigger issue is the persistent lack of supply. A slowdown in construction after 2008 produced a shortfall of nearly 4 million homes. And rent regulations and not-in-my-backyard zoning limits in cities such as San Francisco and New York have retarded needed development for years. Okay, got it. We don't have enough supply. Everyone in America understands this, I think. Traditionally, the help Congress has offered buyers, including subsidies and low-cost loans, has spurred demand, exacerbating these supply pressures. Also true, we don't think that just giving more money to people to buy homes helps, because if you just give everyone $50,000 to buy homes, well, the sellers are just going to raise their prices by $50,000. You haven't solved the problem.
Not to mention 5 to 10 years from now, you're going to need to do the same thing all over.
Correct. So you're not really helping anyone. Okay, great. Like, we understand this. That's what the 315-page renewing opportunity in the American dream, the ROAD Act, aims to address. Okay, what? Tell me more. The sprawling bill, which recently received unanimous backing from the Senate Banking Committee, would slash more of the regulations that impede home building in the U.S., such as environmental reviews for some federally funded housing construction. It would also eliminate the absurd requirement that manufactured homes be mounted permanently on a fixed chassis, which adds unnecessary costs and limits design flexibility. Okay. I don't know that that's, a huge thing, given that most, housing is not federally funded, and most homes that are, I don't know that there's this huge demand for manufactured homes, but it's neither here nor there. Let's keep going. It also rewards communities for taking risks to build. Those that demonstrate a track record of accelerating housing development would receive larger federal block grants, such as a $200 million innovation fund directed at local governments. So here's the thing, is our show's based out of the Northeast. Probably one of the worst markets for buyers in terms of affordability in the country, if not the world. Fair? And I'm convinced at this point that if Americans actually wanted to build more houses in their communities, they would build more houses in their communities. I've seen in Massachusetts things like the MBTA Communities Act, which forces communities to build certain levels of housing in and around areas that are close to mass transit. And the local communities have almost unanimously pushed back on this and said, no, we don't want more building. And so I don't think simply throwing more money at the problem in terms of, well, if you build more rapidly, you'll get more federal funding. I'm just not sure that gets there, because it's not about money. It's about people saying they don't want more development. And I don't know how to change that other than convincing people that more development is, in the aggregate, good for the economy and good for them too.
Not to mention the local zoning laws in different communities all across the country are they differ so greatly that any change on the federal level isn't going to negate the voting down of the MBTA Communities Act, as an example, or whatever provision may be out there in other states across the country. It's valiant to be at least thinking about trying to solve this problem, but to me, I disagree with the title of the article, that it is a job for Congress. Unfortunately, it's not. I mean, the levers that they can control loosely are some of the interest rate side of things, not on the longer end of the curve, obviously. That, to me, maybe that makes the economics a little bit better, but ultimately it comes down to local communities approving zoning or deregulating some of the zoning requirements to allow for more building to occur. But many communities take the NIMBY approach of not in my backyard.
And again, this doesn't have to be a one-size-fits-all approach. There are plenty of communities that say, look, we don't want any big, high-rises or even, mid-rises. We don't want, the 5-story condo building. It's fine. But can we make it easier to allow for duplexes or triplexes so that on each parcel of land you're getting 2 units of housing or 3 instead of just 1? Like, those are things that don't change the overall feel of a community but can still add additional housing. Can you change local regulations to make it so these ADUs, the accessory dwelling units, is that what it is?
Yep.
So that you can have those more easily, built because, hey, it's on your own land, and if you want to put something in your backyard, why should your neighbor have to say it's cool with them? Like, I think that we need to figure out ways to make it easier to build, but I'm not convinced this is the answer because it has to happen at a local level. We've even seen, again, in Massachusetts, state laws, about this stuff get pushed back, and that's coming from a much closer place than, a big federal overarching legislation. Let's take a quick break here. When we come back, trivia answer in Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10%. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, we're seeing a small pullback on Wall Street as traders digest significant retailer earnings from Walmart and await Fed Chairman Jerome Powell's speech in Jackson Hole tomorrow morning. Right now, the Dow is off by 0.2% or 103 points. S&P 500 is down by only 9 points, about 0.1%. NASDAQ down 0.1% as well, or 24 points lower. Russell 2000 is off by 0.1% as well. 10-year Treasury yield up 4 basis points. It is now at 4.339%. And crude oil up about 0.5% higher, trading at $63 a barrel. Walmart reported rapid sales growth in the second quarter and raised its outlook, saying it is winning over shoppers with grocery discounts and fast shipping. However, the retail giant missed earnings expectations on an adjusted basis, sending shares 4% lower on the day. Meanwhile, according to the Wall Street Journal, Meta has frozen hiring in its AI division after spending months scooping up researchers and engineers. Shares in the Facebook parent company are down about 1%. Speaking of hiring freezes, Novo Nordisk announced a hiring freeze in non-critical areas as it looks to fend off competition and control costs. Shares in the Ozempic and Wegovy maker are up over 2% now. Meanwhile, beauty and scents company Coty seeing its stock plunge 20% after it posted an unexpected quarterly net loss. Cracker Barrel sinking over 12% after the restaurant and gift shop chain unveiled an updated logo earlier this week that's drawing criticism on social media. And beginning today in 400 stores, Starbucks will expand its test of coconut water beverages to hundreds of more stores as it leans further into health and wellness with its cocoa, matcha, and cocoa cold brew drinks. Starbucks shares are down by 1% on that news. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. What was the name of the U.S. warship that delivered the atomic bombs? That would be the USS Indianapolis. David in Edgartown is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to David. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece here from Barron's that I think is just a fantastic one, quite honestly. Some retirees are too frugal tips to help them loosen their purse strings and enjoy life. And this, I think, is something that I see quite often, which is the biggest concern that you hear from retirees is, I don't want to outlive my money.
Mm-hmm.
I don't think we hear nearly enough, I don't want my money to outlive me. And I don't mean that you want the last check to bounce, because none of us know exactly when we're going to die. And if, you live one more day and then, hey, I needed one more check, but the second to last check bounced, now you're kind of in a pretty dodgy spot. But I think ultimately that the things that I come back to are twofold. The first is, a lot of people stick to this idea of the 4% rule.
Mm-hmm.
And the 4% rule, you have to remember, is built for a 30-year retirement. And as you get older, the odds of you having another 30-year retirement go down. We don't have many 120-year-olds out there these days. So if you're sticking to a 4% withdrawal rate at age 90, you're probably doing yourself a disservice. Now, you might say, hey, that's great, but I don't need to spend more than this, in which case I start to, talk about ideas such as, okay, have you considered gifting either to family or friends? Have you considered increasing charitable gifting so that you can see, improvements in the causes that you believe in during the course of your life? Because ultimately, if you're going to have more money left when you die than you would like to, see at that time, then you haven't really maximized the value of the money that you've earned. You've just kind of transferred that to someone later, which I'm not saying don't do that, but if that's not your intention, then don't do that.
This is by far the best article that covers what we do on a day-to-day basis, Chuck. It really hits home well, because so much time that you and I spend on a day-to-day basis is right around this same subject, that many clients that we work with just don't feel comfortable given the green light to spend. And that's why we continually get together with them every 6 months or every year to plan so that they can understand, here's what you can spend up to find the ceiling. There are so many of us who it's ingrained in them, save. It's very hard psychologically for people to turn on the spigot and go from savings mode, which was a 30 to 35 year horizon, into the distribution phase of life. And so that's a lot of the work that we do and enjoy doing with the clients, is appropriately finding the level to spend on stuff that they're going to enjoy. It's not my job to sit there and tell you what provides you fulfillment. That's for the client to figure out. But ultimately, that planning aspect is huge.
And I think, again, every person has their own, relationship with money and their own thoughts about, how they think it needs to work. There's no right or wrong way to do it. But I do think you have to come at it with, some kind of intention in terms of, this is what I'm trying to do, and not just stick with a general rule, because that might end up with you drifting further from your goal than you think. If you've got $500,000 and you're like, okay, I'm cool, leaving, this much to my kids, but I don't want to leave more. And 10 years later, you're sitting there going, gee, I've got $1 million. What do I do now? The answer is, okay, you've got to change your plan. Don't just keep doing what you're doing, because you're going to have a bigger chunk that you're leaving than you think. Now, I'm not saying that's a bad thing, but hey, again, could you be giving that to your kids during your lifetime so that they can see improvements, during, while you're actually able there to, help them enjoy it? Is it something where there's been stuff that you've been putting off that you want to do, that you say, oh, well, I don't know if I have the money to? Hey, maybe you do then. And so if these are questions that you have, hey, how much can I actually spend in retirement in order to get the retirement that I want and enjoy it the way that I want to? These are questions that the Armstrong Advisory Group can help you with, because, again, retiring too early, I know that that's a lot of people's fears, but what if you retire too late and you don't get to enjoy as much time as you'd like to? The Armstrong Advisory Group has offices all throughout New England, and to call and set up an appointment with one of our advisors, call 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This next one is, honestly, a whole bunch of suck. CME teams with FanDuel to launch betting on financial markets. And we talked about this yesterday that, look, all of us do, dumb investing things in our 20s, and I understand that. But ultimately, there's a reason why you probably don't want to be able to do a parlay of how many homers is Aaron Judge going to hit today with how much is Nvidia's stock going to move today, and, will the result of the Diddy trial be released today. Like, you don't want to have all of these things in one place because they're fundamentally different things, and there's a reason why we've generally regulated betting markets and financial markets, and it's because when we don't, people lose all of their money with leverage. I mean, let's call a spade. That's what it is. The reason why we have regulation in financial markets is because people borrow too much and blow themselves up. Mm-hmm. And when you start mixing gambling and investing, you can really, get into some pretty dodgy places pretty quickly. And I think that this is just a whole bunch of suck, quite honestly.
It is incredible how prevalent this is becoming. We talked about, Robinhood offering the predictions markets earlier this week. And
on sports,
yeah. Basically not pivoting, but also in addition to the financial markets exposure that they have, adding in sports gambling, and the same thing here on the other end of things. And what I was coming back to is, predictions are something that are fun that you and I might do to throw up on the board, but there's no monetary value behind it. Yeah, I might get made fun of if Nvidia doesn't move the markets next week or vice versa, but there's no monetary commitment, and they're just blurring the lines a lot on that. I just find it hard to believe that a prediction isn't a prediction if you're in Robinhood and giving a certain amount of money towards it. And similarly here, it does seem like these two entities should be separate. Nothing against legalized gambling. That's fine for people who want to do it as entertainment. But when you get into some of these other markets out there, I just don't know if that is necessarily the way to go.
Look, there's a reason why if you are trying to trade stock options, your broker requires you to sign a completely separate form in order to do so. It's because it's a huge high level of risk that you're taking on. And this is basically the equivalent of being able to trade options on FanDuel. It's pretty darn close. And given what I'm already seeing from men in their 20s and the amount of gambling debt that I'm seeing them taking on, I think this is a horrible thing that is going to result in no good at the societal level. Now, you can say, okay, like everyone should be free to do whatever they want. Okay, why don't I drive on the left side of the road? There's reasons why we still have some rules is because it gets dangerous to do certain things when, people start just saying, screw it, why can't I drive with my feet on the steering wheel? Okay, no, we're going to take your license. Likewise, when we start talking about mixing sports gambling with effectively futures contracts / options contracts just on financial markets, I don't see this be like. Here's the positive. FanDuel's going to get a bunch of extra commissions coming their way. Mm-hmm. Other than that, you're going to lose.
Right.
Right. You being us in the aggregate. The house always wins. The real money is in the flow, not in the price. So, yeah, I don't think we should have sports gambling apps to begin with. You should have to walk into a casino and place your bet. And whatever this is shouldn't exist either. Because, I don't know, now you're betting on the S&P 500 on FanDuel. What are we here? Let's take a quick break, and when we return, we're going to have Stack Roulette because that's what we do on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Paul, what do you got for Stack Roulette?
Chuck, landlines are making a comeback. Yes, you heard that right. Even though AT&T tried to stop servicing landlines in California last year, and they're largely considered obsolete. Do you have a landline in your house, Chuck?
No.
I have it just because of the security system, but I Couldn't even tell you the number.
Oh, security system.
Oh, yeah.
Oh, yeah.
My wife is a paranoid wreck. But I digress. What the company Tin Can is trying to do is put together for younger kids out there the old school 1980s corded phones system that will allow for kids who aren't old enough to have a cell phone yet to be able to call to their other friends using a 5-digit code. They're going to expand it out to standard phone numbers later, but now they have these tin can phones which retail for $75 that are similar to the 1980s design for a different way for younger kids to communicate. And the reason I cover this story is it is something that I do think about a lot. I have young kids that aren't at that age yet, but I absolutely know in talking with clients, it's like Pandora's box, giving them a smartphone and trying to find some way to slow down that transition as much as possible, which is probably going to be tough to fight with all the kids in their class. Getting them at an early age is something that I think about often because there's a lot of stuff you can get into once you give a kid a smartphone.
I think this is awesome, quite honestly. And I think that you're starting to see a lot of positive movement towards, hey, we want to enable kids to communicate and use technology, but not just be stuck on their phone or tablet all day. I know that Massachusetts is in the process of voting on a bill that would ban cell phones in schools beginning in the next school year.
Texas, I believe, passed one.
Texas, I think, passed one. So, I think we're finally, waking up and being like, hey, this stuff is kind of bad for kids. Maybe we shouldn't just allow them to be on it all day, every day. And by the way, I say this as someone who, by the time I was in 7th or 8th grade, I was playing a couple hours of video games a day. But there's a difference because it wasn't something, and again, I keep coming back to this, I couldn't just reach into my pocket during class and play video games. I had to get home, I had to finish my homework, and then I could hang out and play some video games and, play a bunch of Counter-Strike and, do whatever I did with my friends for a couple hours, and, it was great. When you're just on it all day, especially with how social media is now, it's pretty clearly bad, and I think that anything that's getting people more communication but fewer screens is great.
And the algorithms have got so much more sophisticated that they almost are quite literally addictive. Not to say that we didn't play our fair share of video games, or I was on Instant Messenger a ton as a kid, but now these things are more sophisticated and designed to literally have kids hooked, so it's a different ball game.
I want to talk about this piece from Yahoo Tech. Google's new AI-powered flight tool could make your next trip way cheaper. Here's how. And basically, it's this thing where instead of, searching different locations, you just add a prompt. So the one that they give is a week-long trip this winter to a city with great food, nonstop only, or a 10-day ski trip to a world-class resort with fresh powder. So I decided, hey, you know what? I want to try this tool out for myself. And golly, does it suck. I said, I want to go to a beach with 2 toddlers in January through March of 2026, preferably a beach with no big waves. So it knows where I am. It says, okay, so you're flying out of Boston, which is obviously the closest airport. It clearly does not know what toddlers are because the number one result that it puts up is that I should take a 30-hour and 55 flight with one stop to Denpasar, Indonesia. So that I could go to Sanur Beach and the Bali Museum and temples with my toddlers. Now, in case you think, oh, that's just one bad result, the next 3 results on the list are a 19-hour flight with a stop to Phuket, Thailand. Or is it Phuket? I don't know. Tenerife in Spain, or Tenerife, whatever it is. Tenerife, there you go. That's a 35-hour flight with 2 stops somehow to get there.
That's
That
crazy.
sounds lovely to take my kids on.
Is that's Canary Islands, isn't it?
I believe so. It's somewhere around there.
Yeah, I was on the other island.
Or I could go to Nadi in Fiji, which is 20 hours on Fiji Airways. And finally, I get to the Canary Islands, Las Palmas de Gran Canaria, which is 2 stops, 17 hours and 45 minutes on Scandinavian Airlines. All these, by the way, are more than $1,400 a ticket. So, no, I don't.
I went there way cheaper.
Finally, on the 5th option, I get to Miami, which, by the way, does not have little waves. The Atlantic side of Florida has some big waves. Nowhere in here is Fort Myers or Tampa or, something along those lines. So I think the tool needs a little bit of work. It does say this is the beta version. I hope the final version's a little better because I'm not going to Indonesia with the kids this winter.
No notes there. You nailed it.
Quick break for the rest of the day. We'll see you tomorrow. And we're not in Jackson Hole, but Jay Powell is. We'll tell you what he's saying.